Okay, hi. So can everyone turn on their cameras? Yeah, to make it seem like we're more of like a club. Okay, cool. So hey guys, good evening. Let's start our Hoperation Fund August meeting. So fun fact, today is actually our 119th meeting we hosted in the Hoperation Fund, like including reading clubs, guest speaker lectures, etc. And so it's nice to know we've like been here so long. So today I'm going to start off with a couple of big announcements, and then I'm going to give an update on the Hoperation Fund portfolio and stock market analysis. And then we will have our financial news reports. And finally, instead of like a regular financial lecture today, I'm going to be giving a talk about a review paper I got published, which is about large language models for stock price forecasting. Okay, so first big announcement today. Um, we're changing the schedule of our regular meetings. So for the first 20 minutes, as always, we'll have our announcements, investment portfolio updates, market analysis, and financial news. And then for the rest of the 40 minutes, we're doing a new schedule where for the first 20 minutes, we will review on old concepts, and then in the second 20 minutes, we'll learn new advanced concepts. And this way, we'll get we'll get to like learn new advanced concepts while still remembering the old topics we talked about. And like in case anyone new is coming to the Corporation Fund, they'll be able to um we'll be able to revisit the topics. So for the second 20 minutes, two education committee members will present each meeting on the financial knowledge concepts we learned previously. And it will be the same curriculum as the 2024 to 2025 and 2025 to 2026 school years. And then afterwards, I will probably give some new material on value investing, quantitative trading, etc. So you may be wondering, what are the education committee members? So I'm excited to announce the Hoperation Fund's Education Committee. So the responsibilities of this committee will be to assist in developing educational programs and help organize competitions, reading clubs, study groups, and other learning activities. More importantly, each member will take turns delivering a financial presentation of about 10 minutes in our monthly meeting. And you can directly use or modify the slides I used previously. All senior members who have been with Hoperation Fund for more than 1 year are welcome to participate. And by participating, you can build your leadership skills and organize educational activities, improve teaching and public speaking abilities, and deepen your understanding of finance and investing as you go along. Well, we're going to limit the seats in the education committee. So the maximum amount of members is five. And if you're interested, please email me. I think it's a really exciting and really great opportunity. And if you want to see the committee members, you can go to the Hoperation Fund website, um, like hover over the About section and click on Leadership. And there will be a section with our education committee. And speaking of committees, in case you guys missed this last meeting, I'm going to announce again the Hoperation Fund's Philanthropy Committee. Responsibilities of the Philanthropy Committee members will be to research potential nonprofit recipients, evaluate their mission, impact, credibility, and alignment with the Hoperation Fund's values, and recommend donation amounts. And at the end of each monthly meeting, committee members will report on their research findings, including the nonprofits they explored and missions, impacts, other key information. By joining this committee, you can build important company analysis and capital allocation skills, which are crucial for investing and business. So for the philanthropy committee, we're also restricting the number of people. And currently, we have one philanthropy committee member, Arav, and we're looking for four more. So if you're interested in joining the philanthropy committee, then please tell me. Okay, cool. Does anyone have any questions so far? No. Okay, cool. Great then. And then lastly, just like the overall general announcement, we're always seeking more vice presidents of chapters. And anyone who's been a member of the Hoperation Fund for more than a year can can apply to become a vice president of chapter. For more information, go to the website about section and the open positions. Okay. So on to the investment updates. So as you guys probably or you might know, the semiconductor industry performed pretty badly in July. And since a large portion of the Hoperation Fund's capital was in semiconductor related stocks, the return in July was not great. The year to date of the Hoperation Fund is currently 10.86%. So in July, well, we ended up liquidating positions in XLK and the technology sector ETF of the SPY, like the S&P 500 and Micron. And with the remaining money, we slightly increased the positions in NVIDIA. So currently we hold three stocks, two two long-term stocks, NVIDIA and Google, and as well as Lilly for slightly short-term investing. And with the remaining capital, we ended up switching to a new long-short trading algorithm. And this long-short portfolio is constructed using around 55% of the total account capital. Also, we're going to be talking more about this long-short portfolio later. So just an overall update, the total return of the Hoperation Fund portfolio is 125.4%. Okay, now about the long-short portfolio. So this is the new algorithm that the Hoperation Fund has decided to use. So based on this framework, pretty famous framework called the empirical asset pricing methodology, we use a model to predict the future prices of stocks and then go long on the stocks with the highest expected returns while shorting the stocks with the lowest expected returns. And in this portfolio, we have 19 positions here currently. And here's a peek of the positions. For a more in-depth look, I back-tested the long-short portfolio um, since its construction on July 16th to July 31st. And July 16th was when we initialized the portfolio in the Hoperation Fund. And you can see the performance is pretty stable. This is long short portfolio, and this is SPY and QQQ. And as you can see, these two market indexes are pretty volatile. while the long short has mainly stayed the same throughout this market turbulence. And this is greater backtesting over a longer period of time. And you can see it's much more stable than SPY and QQ and has higher returns, a return of 28.35%, and a max drawdown of impressively minus 3.5%. And you can see the Sharpe ratio is 3.78, so pretty high, like really high. Okay. Further back testing, we can see this is the portfolio and Spine QQ. Okay, so continuing on to the market analysis, currently the market direction based on the Hoperation Fund's model for the midterm seems bearish, while the long term is still bullish. The CNN Fear and Greed Index is 42, so neutral, slightly leaning towards fearful. And the market value is still pretty overvalued. The 10-year treasury yield has risen from 4.2%, I think, to 4.7%. I would suggest having the majority of stocks. I have the majority of your position in stocks, sorry, and with some in cash equivalents. And yeah. Okay, so an update on our market top warning signal. Mm, so I think for the past 2 or 3 meetings, we've talked about this signal before, and I promised to give you guys an update. So here it is. As you can see, it has actually changed pretty sharply and dropped down like right before it crossed the threshold, which is pretty interesting actually. So currently, that means we should have to just like keep on watching. Okay, great. So now on to our financial news. I think we have one market brief today, Arav, right? Um, so Arav, would you like to give your presentation then?
Yes.
Great. Oh, wait, let me show up. Wow, cool. Also, for the remaining people in this meeting, can you guys please turn on your cameras? Thanks.
Okay, my presentation is about the Federal Reserve and interest rates. The history of the battle against inflation. After COVID-19, inflation increased due to many reasons. To slow inflation, the Fed began raising interest rates. Higher rates made borrowing more expensive and slowed economic activity. By 2025, investors had focused on when the Fed may begin lowering the rates again. How do interest rates even affect stocks? The Federal Reserve changes interest rates to limit inflation and to support the current economy they are dealing with. Higher rates make loans more expensive and can slow companies growing and developing. Lower rates are better because they support spending and investment. Different stocks react differently depending on the rate environment. How should we respond to the Fed decisions? When rates decrease, growth stocks may become more attractive, and technology and innovation companies benefit. When rates remain high, investors may like stable companies and ETFs more. Risk management also becomes more important. Stocks and ETFs to invest in with lower interest rates. The Vanguard High Dividend Yield ETF, the Vanguard Real Estate ETF, the iShares Core S&P Small Cap ETF, the Invesco S&P Mid Cap Momentum ETF, and the First Trust Small Cap Growth Alpha DEX ETF. These offer portfolio diversification, income generation, and growth potential. Stocks and ETFs to invest in with higher interest rates. JP Morgan Chase and Company, Berkshire Hathaway Incorporated, Schwab US Dividend Equity ETF, also known as SCHD, and the iShares 0 to 3 month Treasury Bond ETF SGOV. These offer steady and defensive income when faced with higher interest rates.
Yeah, thank you so much, Rob. I think that was a really important presentation. I think like many people are concerned about the interest rates, so thank you for that overview. I think Sebastian also has a presentation actually, so sorry about that. So you can go on and present now.
Situational awareness was founded in 2024 by German-born Leopold Aschenbrenner when he was 22. Aschenbrenner, a former OpenAI worker, founded the Hedge Fund on the theory that AI will be the dominant driver of global market returns over the next decade. In June 2024, he wrote a 165-page essay which argued that governments, businesses, and investors didn't realize how quickly AI would change the economy. On Thursday, July 30, 2026, Situational Awareness was forced to sell most of its public holdings to a larger rivaling company after many of its investments collapsed. Also, the fund used a risky strategy of borrowing money to buy stocks. When the investments rise, they can make lots of money, but when the investments decline, their losses can be off.
Wow, thanks for that report, Sebastian. That was really interesting. I actually wasn't aware about that news, but yeah, it's really cool about that hedge fund. Mm. So thank you so much, Rob and Sebastian, for your presentations. I think they were really fascinating to see. Okay. So I hope you guys all learned some interesting things from the financial news reports. And next, let's move on to the talk for today. So instead of giving you guys like the normal financial lecture, today I'll just t give you guys like an overview of a review paper I wrote. And it's the title of the talk will be Large Language Models for Stock Price Forecasting, a Hedge Fund Perspective. So I'll mainly be talking about the latest applications of large language models in stock price forecasting, because large language models and AI in general has been a pretty hot topic in investing, and many hedge funds are beginning to use AI in their trading. So while many review papers discuss broad applications of LLMs in finance, they often cover an overly wide scope. And then this paper will be focused on a more specific area, LLMs for stock price prediction specifically. We will categorize existing applications into five major areas: sentiment extraction for predicting market movements, analysis of financial reports and earnings call transcripts, identification of cross-equity relationships, tokenization of stock price data for next token prediction, and the development of agentic AI systems. The second part of the talk will discuss key challenges in applying LLMs to stock forecasting. And these include issues such as the reliability of sentiment analysis, data leakage, database limitations, performance evaluation, illiquidity, and the fundamental challenge of market prediction or predictability. And then we'll explore some promising directions for future research. So, yeah, let's get started. So, a review of large language models for stock price forecasting from a hedge fund perspective. And I think this is going to be pretty useful if in the future you ever decide to do quant, or if you just like want to apply AI into stock market trading. So why this review? Markets are noisy, non-stationary, and fiercely competitive, which makes stock forecasting intrinsically difficult. Recently, LLMs are being increasingly used for stock market forecasting. LLMs have advantages over traditional machine learning algorithms because they can process massive amounts of text, such as news, reports, filings, transcripts, and social media posts, reason with prior knowledge, and combine many sources. Existing surveys cover LLMs and finance broadly. Few focus on stock price forecasting, as I said before. And more importantly, prior reviews are academic oriented and overlook practical considerations that can significantly affect real returns. So the question is, how do existing methods hold up under real hedge fund constraints? So today we're going to be talking about three things. First, techniques, a focused review of recent LLM applications in stock price forecasting and trading. Second, challenges, critical assessment of empirical practices and identification of important challenges. And third, just overall practical guidelines. And so let's get started with the first part. Overview of LLM applications. We can classify LLM techniques into five main categories. Sentiment extraction, which is inferring investor attitudes from news and social media, financial reports and transcripts, extracting facts from 10Ks, analyst reports, and earnings calls, cross-equity relationships, discovering relationships across stocks, tokenization of time series, discretizing prices into tokens for next token prediction, and agentic AI trading, which is a pretty hot topic recently. So technique one, sentiment analysis. This is pretty straightforward. We try to infer investors' attitudes and the general market's sentiment towards a company. And we try to leverage LLM's language understanding and contextual reasoning skills to classify news, headlines, and social media into sentiment categories or scores. Sentiment can either be labeled uh, by an expected price impact or by the sentiment's tone. One thing to note is that prompt engineering is critical in zero-shot or few-shot regimes. What this means is, I'm not sure if you guys are familiar with these terms, but if you want to not train a model that much, or if you just want to do very little fine-tuning on it, then you will need to focus on structuring your prompt well. So here's an example for you guys, an actual paper. So this uses a fine-tuned BERT model, and this is a type of deep learning transformer architecture. So a pretty popular type of deep learning model. It uses this model to take textual data from financial news, extract 58 sentiment scores, and then combine them with some other features from the stock price to get into a random forest, which is a machine learning model, and get a stock direction prediction. Okay, second technique, financial text analysis. So this is different from sentiment analysis because in sentiment analysis, we're trying to find the overall tone and just other investors' views, while here we're trying to extract relevant facts from financial reports, analyst reports, and earnings call transcripts. And this can save investors, analysts, and firms huge amounts of time that would otherwise have been spent reading through these documents. So here's an example of financial text analysis. So this is a model. There's three modalities: audio embedding, text embedding of the transcript, and I'm using an LLM to perform fine-grained information and fact extraction. And this third part is what is financial text analysis. So you take a transcript and like from an interview or some kind of earnings call, you segment it into text chunks, and then part of this model feeds the text chunks into an LM and summarizes it and gets features, while another part of it uses retrieval augmented generation and a question bank to like extract answers and then take those answers to questions and then also encode them as features. Okay, third technique, extraction of cross-equity relationships. Here we try to use an LLM to reveal other contextual information, such as relationships between stocks, market sectors, and assets. So I'll give you guys an example. Say I have like information that like Nvidia's stock price is rising. Then using that information, I can somewhat like I can like estimate that other stocks such as Micron or like TSM, ASML, those kind of like stocks that are generally in the semiconductor industry may also be impacted. So their prices may also rise. So that kind of thing. So like here in this paper, the researchers prompt an LLM to extract relation triplets, and using those triplets, make a graph. And these are like causal, this is a causal graph, and then like which company or which stock affects which other stock. And then on this graph, it applies a heterogeneous graph transformer, which is another deep learning model that specially like reads these graphs and then outputs a classification. Like whether one company that's given will go up or go down. A fourth technique is tokenization of time series. So this technique is pretty popular too. It focuses on discretizing the numeric price into bins and then mapping them into tokens. So take a time series, um, put the price into tokens, and then frame it as next token prediction, which is what LLMs are naturally very good at. The advantage of this is that it relies less on noisy news than previous techniques. You just need a stock price, and it allows for on-the-spot predictions, and it's able to predict multi-step future returns. Some caveats are that it's highly sensitive to bin design, normalization, and spacing. It's even like very small choices can change what the model sees. So you have to be very careful about that. I think I read a paper once and it was like a data processing technique that was that performed very well on a ChatGPT model was like transferred to a llama model, which is another type of large language model, and the model ended up performing like really poorly. So hyperparameters do not transfer across different architectures. An example here, this model discretizes daily returns of stocks into bins numbered 0 to 401. On that information, it makes forecasts. It goes long or it buys the top forecasted decile and short on the bottom decile. The average annual return of this is 109%, which is a very spectacular result. However, as we'll later talk about, this is subject to constraints, so it may not perform very well actually in the real world. And final technique, multi-agent decision systems. In this technique, each agent instantiates specialized roles to assess data from different perspectives. These judgments are then aggregated into a final decision. Some advantages of this system, or this model, is that it's well-rounded. You get to like fuse the perspectives from different like different specialized agents, and this can reduce single model hallucinations. In addition, agents can be optimized in parallel for higher efficiency. However, these decision systems are usually very reliant on data quality. Popular paradigms or model architectures include React, Chain of Thought, Tree of Thought. These two are pretty popular machine learning algorithms, and reflection. Popular engineering frameworks and tools include LangChain, LangGraph, AutoGen, and Crew AI. So here's an example of a multi-agent decision system. In this paper, the researchers have three agents: a time series agent to process the stock prices, a news agent to read the news, and a statement agent to analyze the financial statements. Then each agent analyzes this information by itself, and it's specialized to do that. And then the three perspectives are combined with one big overall like AI expert. And while they're combined, this model can take in a human investor's own risk preferences. So depending on like what type of investor you are, the model can change its recommendations based on like your preferences, on how well you take risk, etc. And so yeah, it's pretty interesting, pretty easy to implement actually. And so this is a classic, what you would call a classic mixture of experts algorithm. Okay, now on to issues and challenges. Because if you really want to like deploy a model, then you should make sure not to avoid, like you should avoid pitfalls. So let me give you guys an example. There was a famous experiment that a famous hedge fund like a famous hedge fund constructed, and this was a game where participants viewed the next day's Wall Street Journal front page and could choose to make trades based off of it. So based off of like the next day's news, which they could like see, they would predict whether or not to like buy the S&P 500. But even with this god's-like view, around the accuracy rate, so like getting it right, was only around 51.5%. So basically just like randomly guessing. Around 45% of investors lost money, and around 16% went bust or went bankrupt. So this shows that sentiment may actually have limited predictive robustness. And also, after this, you can like go and search up the crystal ball experiment and try playing it. See how much money you can make. But anyways, so back on topic, like sentiment may have limited predictive robustness. And one reason for this is that news can be context dependent. The same news can imply opposite directions under different regimes. A stronger than expected payroll is bullish in a disinflationary regime, but bearish in an overheating one. Another difficulty or problem is that sentiment return relationships are also non-stationary. As an example, before 2022, trading news related to Cathie Woods, the founder and manager of ARK Innovation Fund, was positively correlated with growth stocks. In 22 to 2023, though, there was less or even like a negative association. So hence, a sentiment-driven model trained only on pre-2022 news may generalize poorly after 2022. So sentiment-driven models may need periodic like recalibration and retuning. And this leads to an open frontier. There needs to be explicit regime detection to figure out like what kind of a market we're in. periodic recalibration, and robustness checks at the deployment of a model. Most LLM-based sentiment pipelines ignore this, so this is a clear avenue for future improvement. A second issue is issues in datasets. The hedge fund standard is to test across at least one full bull or bear market cycle. But most LLM-based studies conduct evaluation over very short horizons. Common benchmarks span only 1 to 2 years. Big Data 22 and CIKM, which are benchmark datasets, span around 1 year, and ACL 18 covers only around 2 years. And many papers even evaluate over mere weeks or months. And as we've talked about before in the Hoperation Fund, when evaluating a portfolio or algorithm, you want to be able to look at it over a long period of time. So you get to see how it performs over different market conditions. So this brings up a risk. Model performance and generalization may collapse out of sample. Okay. Another issue and challenge in performance evaluation. Many papers compare only to other LLMs, not to established non-LLM trading methods. Other works compare LLM solely to a buy and hold benchmark for a short period of time. And again, comparing it to a buy and hold benchmark for a small period of time can introduce bias because algorithms will perform differently across different times. In addition, popular metrics such as MSE, MAE, and accuracy, I don't know how familiar you guys are with these metrics. These are classic machine learning metrics. A mean squared error, mean absolute error, and accuracy. These metrics reward point closeness, but they don't necessarily mean tradable signals. For example, say I have an algorithm. Every day I predict that tomorrow's price is going to be equal to today's price. So I predict that tomorrow's price is the exact same as today's price. This may give low mean square error because sometimes the changes from day to day of the stock market is not very big. Like the S&P 500 can have 1% returns, 0.5% returns for a day. So the metric may falsely um, inflate performance, but in reality, this algorithm isn't tradable. I can't just say oh, every day's price is going to be the exact same and trade like that. So from a hedge fund perspective, you should use risk-adjusted performance metrics such as profit and loss, Sharpe and Sortino ratios. Again, we talked about that before. Maximum drawdown, turnover, etc. And comparisons to established training algorithms are more practical. A, a fourth challenge, data leakage. So there are three common leakage modes that can silently inflate reported performance. First, cross-day event drift, where earnings news can be discussed for days, and using layer posts to predict an earlier event can encode the market's already known reaction. Second, literal label statements. Headlines themselves can leak answers, like Tesla tumbled after announcement. If you have a model that predicts using news headlines, then that basically just tells you that the stock market, Tesla is going to drop. Mm, And third is leakage from reports. So reports from one company A will sometimes mention another company B's condition. And another very often overlooked issue, illiquidity and premiums. Most studies assume infinite liquidity, even for small or mid-cap stocks. But in practice, these stocks have relatively low trading volume, resulting in slippage. So what this means is that many algorithms assume that they can trade for a stock at a specific price. But for some stocks, they're smaller, so there's not as many people trading them, and volume is lower. So sometimes you can't get a stock at exactly the price you want. And you maybe like have to pay 1 cent more or 10 cents more. This may not seem like a lot, but the difference can add up a lot, like significantly. Like a trading algorithm returns 0.3% per day. So a 112.7% annual return, given traditional 252 trading days. But with a modest 10 BPS daily premium, so if you just lose 0.1% return per day, then your annual return goes from 112 or 113% to 65.6%. And that's just 10 BPS. Usually, for the Russell 2000 of small cap stocks, the mean illiquidity premium is 0.2%. And finally, predictability of stock prices. The market will fluctuate from sometimes like random walks to predictable structure. So there's currently like a big debate going on whether or not the stock market is just one entire long series of unpredictable noise, aka a random walk, or versus a predictable structure where patterns in the stock market can be exploited. A more pragmatic or realistic view is that markets can alternate between regimes. Sometimes it may seem like the market is incredibly noisy, like it's not going anywhere, and sometimes maybe you have exploitable structures. So this gives an implication for design. Perhaps future models can work on detecting the regime first. Like what period of time, like what period are we in? Random walk or predictable structure? And then trade only in non-random walk intervals. But here's a well-due caution. Don't naively assume large language models can solve a decades-long open problem in finance. Like people are still struggling to use AI algorithms to trade. So it's very hard. So overall, this review surveyed recent LLM applications in stock price forecasting, evaluated existing methods, and highlighted practical considerations overlooked by prior literature. So here are some guidelines that you can use. If you ever want to like deploy a LLM into stock price forecasting, first, use long horizon datasets. Use long horizon regime spanning data covering full bull or bear cycles, and this can give you a much more accurate um, like performance evaluation. Use trading line metrics too, and the metrics should be aligned with trading objectives. Um, have rigorous leakage control. So control data leakage rigorously. Account for illiquidity and premiums. So be realistic on like costs. And finally, use transparent benchmarks. Like benchmark against non-LM, like traditional um, algorithms. So overall, that's it for today. Do you guys have any questions?
I meant to do the raise hand thing, but I have a question.
Yeah, sure. Go ahead.
If you can go back to I think slide 11 or something.
Okay.
It was the issues and challenges, that one. I don't know.
Mhm.
Or it was with that one egg crystal ball thing.
Oh, right. That one, I think, yeah.
Why would they keep going with well, I know it was an experiment, but why would they keep going with it? If people actually they invested the real money, right?
Hmm.
They actually tried it.
Oh
Why
no, it's not real money. It's like fake money.
Oh, okay. Because I was gonna say, why would they keep going if it's so low? But I guess they're not, so that's good. Because that had me confused. Thank you.
Yeah, that's a good question. I actually did the crystal ball experiment. I think you can find it online. But on like okay, this is fake money, so like people aren't going to like keep on doing this probably. But like even then, like there's still like sometimes like people just like want to keep on trying, you know? Like when I was playing the game, I was like, oh my gosh, this is like a, a big gigantic news, like declare war or something, and then it's like definitely going to decrease, and like literally the market changed like 0.1%. So yeah,
Also, how people start gambling, they think just one more time and then it goes wrong.
yeah. But it would be pretty cool if you could like see the next day's news though. Even like if it's not practical for investing, I mean, it's still pretty cool. But like you can't do that, right? And even if you could, you still wouldn't have gotten good performance. So womp womp. Anyways.
Thank you.
Hmm. Okay, any more questions? Oh yeah, Sebastian.
Um, how long do you hold positions in the long short portfolio?
Oh, sorry, which portfolio? Oh, the whole for the Hoperation Fund? Or
Hmm.
wait, for the Hoperation Fund?
Yeah.
Oh. So we'll hold positions every 6 months.
Oh, okay. Thanks.
Yep, no problem. Okay, any other questions? Yeah, Lauren?
I just wanted to know, are LLMs, are they kind of like artificial intelligence in a way since they tracked all that data?
Yeah, yeah, large language models are like a type of like there's many different models, like are AI models. They're a pretty common type. Like you know like ChatGPT, Claude, Gemini, right? Those are all large language models. Like those chatbots, they're designed to like look at like what you're typing and then like make like give a response. So those are all large language models. So yeah, this whole presentation is about how you can use like models such as ChatGPT to help you invest. Like, and these are um like obviously like maybe when you're thinking use ChatGPT to help you invest, you think about just like, hey ChatGPT, tell me what stock I should buy, right? But these are like more specific methods.
All right, thank you.
Hmm. Yeah, no problem. Well, yeah, Emily, any question?
And they use other LLMs or other AIs to like verify it.
Like to verify your prediction?
Yeah.
Yeah, you can. Like a lot of like models do that. Like here, I think this is a multi-agent decision system. So you have like three separate LLMs here. They combine a prediction, and then you have another LLM to verify. So yeah, that's actually a good strategy. Like so to make sure your models aren't like completely hallucinating or anything. Hmm. A good idea. Okay, any final questions? Okay, great then. I hope you guys all learned something. I think using AI in investing is really fascinating, and I'm really interested in large language models myself, so I think it's a really cool area. And you can, if you're interested, you can always like learn more about it. So, all right, let me, um, okay, let's go back. Oh yeah, Lauren, do you have another question?
Before you close out on LLMs, do you think there's like a job opening where people can work with LLMs? There probably already is, but like, do you think since AI is sort of kind of up and coming, that would be like a job opportunity to work with them, LLMs?
Wait, like, do you mean like work with LLMs like themselves or like with stock price? Like with like
Kind of
in finance?
like, I guess what I'm trying to see is in this field, would there be a job opening? I know you can work with LLMs personally because you have like everyone has ChatGPT, but when you go more in depth with them, would that be something a person who has a job would do rather than just random people on the internet? Rona?
Oh yeah, there's like AI engineers, right? It's
Mhm.
like in like OpenAI or like Anthropic or like okay, those are like more famous companies, but like there's a lot of like engineers who are like continuously like designing um like changing, improving large language models.
Okay, I
There are
got
like a lot of AI algorithms, and then a lot of like I think I'm not like 100% sure, but like I know like a lot of like hedge funds and quantitative trading firms also employ AI engineers. Like DeepSeek. DeepSeek was created by a Chinese hedge fund actually. So they're investing in AI. And so I think like there's like famous quantitative trading firms like Jane Street. A lot of people want to go and work there. Or like yeah. And then you can like I think there's probably like positions where you can like work there and use AI for trading.
All right, thank you.
Yeah, no problem. Okay, if you guys have any other questions and like you don't think of them until like later, you can always email me. So that's the end of today's meeting. By the way, um, does anyone I introduced the education and philanthropy committees? Does anyone after maybe pondering about them, does anyone want like interested in joining?
Yeah, I think I would be interested in joining the education committee.
Okay, cool. That's great then. Um,
Okay, thank you.
Please email me afterwards and I'll send you more details. And then
Okay.
like yeah, you'll probably have to forward like an introduction and photo, but I think you might already have that.
Yeah.
Yeah. hmm Yeah, anyone else interested in the education or philanthropy committees? Since we're in a meeting right now, if you're interested, you can just might as well unmute yourself and say so, and I'll add you. Okay, in that case then, if you make up your mind, then you can always email me. Mm. So that'll be it for today. Anyone have any questions about anything? Okay, then yeah, that's it for today. Thank you guys for coming. See you guys
Thank you.
next month. Yeah,
Thank
bye.
you.
Thank
Thank
you.
you.
Bye.
Bye, thanks.
Bye.
Thank you. Bye.
Bye. Oh
You didn't,
yeah.
you didn't want me to create anything for this month, did you? Because I forgot.
Oh, that's perfectly fine. Yeah, next time I'll send you because you didn't really need to like prepare anything since this is technically like the first meeting, I guess, since like the philanthropy committee started. I'll send you an email next month
Okay.
and you can prepare something next month.
Okay, thank you.
Yeah. Have a great weekend. Yeah.